How much money do you need to invest to retire using the Dividend ETF SCHD? It's probably a lot less than you think, and in this video, that is exactly what we're going to go over. A little bit of a background on the ETF. SCHD is the Schwab US Dividend Equity ETF. The methodology of this ETF is to track the total return of the Dow Jones US Dividend 100 Index. Now, from the fun page, as simply as possible, the Dow Jones US Dividend 100 Index is designed to measure the performance of high-yielding dividend stocks in the US with a record of consistently paying dividends selected for their fundamental strength relative to their peers based on financial ratios. In short, it invests in stocks with the history of increasing their dividends over time and then picks the best of the best using financial ratios. The current holdings of this ETF are all basically well known. Home Depot, Verizon, BlackRock, Cisco, Chevron, Pfizer, Amgen, Lockheed Martin, Bristol-Myers Squibb, and Texas Instruments. I'm sure you've all heard of many of those company names, and you possibly even use their products or services as well. This ETF is also one of the most popular ETFs by assets under management, and it is the second most popular dividend ETF after VIG, the Vanguard Dividend Appreciation ETF. So let's get into what you all actually came here for, and that is how much do you actually need to retire using this ETF. And we are going to do a few assumptions here because, of course, I don't know your expenses, and you can always just input whatever your expenses are for the required amount. In this case, I'm going to use this household expense here for one person to forecast that. Now, this is in 2022, but for all intents and purposes, it will act as the same using the same model. So what you're going to basically do is take your monthly expenses here and then multiply that by 12. And what you get is annual expenses of approximately $44,000. And again, this is going to vary widely based on your annual expenses. It's also going to vary based on where you live. Of course, the cost of living in New York City is going to be a lot greater than the cost of living in somewhere like Tampa, Florida. The next number we're going to need is the annual dividend amount, which is currently at approximately $3.30. And what we're going to do is divide your annual expenses by the annual dividend. Now, when we do that, we have a total number of shares needed at approximately $13,000. And the final step to this equation is simply finding the total equity needed. And to get that number, we simply take the number of shares needed and then multiply that by the current price of SCHD, which is sitting at $85.03. And with that number, we get a calculation that comes out to about $1.1 million, which may be quite a lot of money on the surface, but it gets a lot more interesting than that. This $1.1 million is simply how much money you would need to invest today at this time. But let's say, what if you need to retire not today, but let's say your retirement is 10 or 20 years out. How much do you need then? So this calculation is a bit more complicated, but we can do a little bit of forecasting here. So 10 years out, I predict the annual expenses of that person to be $59,557. This is by using an annual inflation rate of 3%. So in other words, all your expenses increase 3% every single year consistently, and we are just going to leave that as the average. Now, this is where the fun of this ETF comes into play, and I'm sure one of the reasons why, of course, we all invest in this ETF is due to its annual dividend growth rate. So on average, over the past 5 years, the annual dividend of SCHD has increased by 12.88%. So I modeled that current dividend of $3.30, and then I added 10% per year for the next 10 years, and I did that to give it a little bit of leeway in the assumption that it may not grow as much. So I decreased the annual dividend growth rate to 10% consistently over the next 10 years. And the number you come up with is $8.55 per share. So again, we simply want to divide the annual expenses by the annual dividend that you receive from SCHD, and you get the total number of shares needed at approximately 7,000. And then, of course, we just need to convert to equity needed. And doing that calculation, you get a much lower number for the total equity needed. If you were to invest $592,319 today, then theoretically, assuming 3% annual inflation on your annual expenses and then a dividend growth rate of 10% annually, you would only need to invest that much. And of course, those are assumptions, but it is far less. And now you can model that however you want. You can even decrease that by a few percent on your annual dividend, and you'll get a slightly higher number, but nonetheless, it is still far less than you would need for investing right now. And then doing the final calculation of 20 years out, assuming all things the same, you get an annual expenses of $80,040, an annual dividend of $22.18, a total number of shares needed at approximately 3,600, which means your total equity needed would be $307,000. So theoretically, if you were to retire in 10 years and you invested $592,000 today into SCHD, you'd be able to retire in 10 years. And then if you were to retire in 20 years, you would need a total amount invested today of about $307,000. And that is significantly less than what you would need if you were to retire today and then take all of your equity and then put that into SCHD. What these numbers really show is how much that dividend works for you over time. The secret of SCHD is that annual dividend growth, and it really shows that you need far less than I probably think a lot of people would think initially, provided that they have time to let that money grow. And that power of SCHD's annual dividend growth is part of the reason why I love this ETF and why I also own it myself. I currently have approximately $20,000 worth of this ETF in my portfolio, which is about 230 shares, and I'm really considering buying more of this ETF. And it's kind of up in the air between this and VIG constantly. VIG also has its own positive qualities, but I think SCHD really knocks it out of the park with that annual dividend growth. When you look at the prior dividend of SCHD in this cash amount column, you really do see it increase over time. Being the most recent dividend in June of 2024, if we go back historically, you see that dividend grow by a large margin over time. Where just 10 years ago, you were only getting paid about 25 cents per share. And then today, at the most recent dividend, you're getting paid about 82 cents per share. So you're really multiplying that dividend by about 350% over the past 10 years, which just shows solid dividend growth and really this ETF's commitment to doing what it intends to do, which is grow your dividends over time. Please remember, if you did enjoy this content, give this video a like. It'll help this video get out there to a wider audience. It would be greatly appreciated, and also subscribe for future content. I'll see you all in the next video.